Afternoon and welcome everyone. The reason I decided to do a live now is my son's got physical therapy at 4 and it's probably going to be a very hard thing to do later. So I decided to do this live. We'll watch Jerome Powell at 3. I got to leave here or end this live no later than 3:30. We're watching XRP as it's attempting to try to make a move here. In real time, it's trying to make a move here. That looks like a little bull flag set up, but we'll see if it can push up past this region. Commodities right now out the gate have exploded. We've got B2 gold up to $3.42. So, you know, congratulations for that, everybody. Gold's up to almost 2,600. Now, could it be a scenario here where we're getting on our tippy toes now because we're very overbought now? I think so, but I'm enjoying this while it lasts. So we'll see how much higher this goes. And it's a beautiful thing to watch. I'm trying to see if XRP will continue to run up here, as it looks like we've got some reversal starting here, which is nice. We came down to a big fib level earlier, so I think we could push here. It's going to be dicey because the rate cut came in 50 basis points. So we're going to watch that on Bloomberg. I'll keep this here so we can catch up, and we'll see this in the background. I know a lot of you, some of you are liking the lives at this time better. And I know a lot of my audience is in the UK, so I completely understand that. So, but what do you think's going to happen here? Do you think we break out here at least up to 58, 58.20 real quick? Kind of looks like it to me. But, you know, we never know. We never know if it's actually going to break up or if it's going to break down. We've had an interesting day when it comes to copy trading and all this other stuff. Somebody said, sorry guys, XRP just ain't the one. That's okay. If you don't like XRP, get into the commodities like B2 Gold and First Majestic. Buy your precious metals if you want to go that route. I cover all of it. So if you don't like XRP, that's fine. Just don't limit yourself. But I really don't know what's going to happen here. I don't know if it's going to have a dump down here right away. You know, it's tricky. I'm thinking, I don't know. So what I want to do here is I want to make sure we'll keep this in the background and we'll watch what Bloomberg says right now because the rate cut just came in. But we'll have old Uncle Jerome here, you know, at 3 o'clock. So we're going to talk. We're going to lead ourselves into this. We'll keep my chart to where we can at least see it if it lets me. Maybe it won't. But XRP, small little push. That just looks like some trading going on. Nothing major. But yeah, it's going to be interesting. I want to watch this in real time with everybody to see if XRP dives down. We had an initial surge here before the rate cut was announced. Now I want to see if we get any kind of follow through. So, good afternoon, John. Thanks for being in Tom's Army for over 6 months with the XRP Predictor. But the mining stocks now are the interesting ones, because after this initial surge, if you're not in mining stocks, watch for what could be a pullback here today. Well, maybe not today, but in time after the news comes out, we're expecting 50 basis points. I'm looking for another opportunity to go deeper and deeper down that sector. So, are we going to pull back? That's the $1 million question, friends. That is the $1 million question. Trust me, I'm watching everything in real time on my phone. I'm trying to get an honest opinion here about which direction I think we're going to go. Why is this chart? Why is it not letting us pull that up the way I usually do? Well, here, let's play this real quick. Yeah, it's a 50 basis point rate cut. Here, let's catch up real quick, and then Jerome will be talking at 3.
P500 on an 8-day winning streak in the bond market. 2 years. Same as follows. Your 2-year yield in America has been moving lower over the last month. Your yield 3.65. Your Fed decision with Mike McKee.
It's 50, and the promise of another 50 basis points in cuts by the end of the year, and another 100 basis points in 2025, which would put the nation's benchmark rate at 3.4%. It's projected to fall another 50.
Holy shit, 50, 100. Wow, that's a lot of cuts. That's going to be super bullish for gold, ladies and gentlemen. This is going to be super bullish for gold.
Basis points in 2026, which would put the rate at 2.9%, which is now the Fed's median forecast for the neutral rate. That is up 1/10 from June. The consensus is GDP will rise 2% this year, down 1/10 from the June forecast. Growth will be the same in 25 and 26. Unemployment will hit 4.4% this year. That's an increase from the June figure. It will fall to 4.3% in 2026. PCE inflation of 2.3% this year falls to 2.1% next year and hits the 2% target in 2026. Though inflation remains, quote, somewhat elevated, the statement says they cut because they now have greater confidence inflation is moving sustainably toward their 2% target, and the risks to inflation and the labor market are roughly balanced. While they do not explain why they decided on a half-point reduction, the statement says the committee is strongly committed to supporting maximum employment. And remember, in Jackson Hole, Chairman Powell said any deterioration in the labor market would be unwelcome. There was one dissent from Governor Mickey Bowman. It's the first dissent by a Fed governor since 2005. It is the first dissent by any member of the committee since 2022. The statement adjusted to say the committee will, as always, carefully assess incoming data, quote, in considering additional adjustments. There's no changes, guys, to the QT portion of the Fed's policy.
Mike McKee, stay close. We'll come back to you. Here's the price.
There's no change to QT. Oh no. We went from QT to QE. They're just not telling us. They just said we didn't. We absolutely went to quantitative easing. Don't let them fool you. Let's take a quick look at XRP real quick. Because it's not. We weren't getting the volume initially. We're still trying to see. Because does that look like a bull flag to everybody? Like it should break up here initially. It looks like it to me. It looks like it to me. If it breaks down, it's very bad news. So we really need it to break up from here. And the initial move just gets us to 58 cents. But that's an important move in my opinion. So that's what I'm thinking. That's probably what's going to happen. Whether it plays out or not, I don't know. I don't know. It's very choppy. We are very choppy. I would like to think we could play this out, but it's very choppy right now. And that's every time we seem to get a little bit of muscle flex, you know, we need some follow through volume. We need one big buyer that comes in and says, I want XRP now. You know, just something that shocks the market a little bit. And they're like, holy shit, that's a big order. But we haven't really got that. But we are starting to show a little bit of positive movement here. And I'm saying little bit because that looks like a bull flag to me. That's I don't know if it's going to play out. I don't know if it's going to play out. But I think because we came down and consolidated on the support structure, doesn't that leave us some credibility? We even put that inverse pattern down there, which is nice in the smaller time frame. But we came all the way back down to the channel. Unless we came down and got rejected, that's how we would have come to 53. We're trying to avoid that right now. This could be a quick slingshot back up. But it really does look like a bull flag to me. So that's what I'm seeing. That's what I'm seeing. Something just happened on one of the charts. Yeah, this chart tried to play up. So this one trying to play up. This is just, to me, this is fascinating. Oh, here, maybe this is where we start pulling. Oh, baby, come on now. We already know we got a 50 basis point rate cut. I'm hoping we get a little bit of movement here before Jerome Powell speaks at 3. But make sure to hit that like button so YouTube does recommend this live. I would greatly appreciate it. I'm sorry I keep looking at my phone, but there's a lot of stuff going on that I have on my phone. I have some news wires. I have the gold, silver, commodities, and stuff that I can follow as well. Like gold's up good right now. It's getting rejected a little bit at 2,600, which I'm not surprised about. We're a little overextended, but we could very well just run through here. That's why I'm excited right now. I own a good amount of precious metals. You know my commodity situation. I don't trust the US dollar. Come on, XRP. first target would be right here. First target that we were talking about was 58.04. That's the first target. This is exciting. Jerome Powell's already speaking. Is he really? It said he was going to be speaking at 3 o'clock. Oh, hell yeah. That's excellent.
And I remain communications challenge for that function from July. This decision reflects our growing.
All right, let's listen to Jerome.
The chairman of the Federal Reserve, after cutting interest rates by 50 basis points, takes the floor.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Our economy is strong overall and has made significant progress toward our goals over the past 2 years. The labor market has cooled from its formerly overheated state. Inflation has eased substantially from a peak of 7% to an estimated 2.2% as of August. We're committed to maintaining our economy's strength by supporting maximum employment and returning.
Here's our initial push. 58 cents filled. Oh boy. If we want to continue this, we're going to start pushing towards 61 because that's the cup and handle resistance if we keep pushing this. That was a nice descending consolidation too leading into this, which is nice.
Inflation to our 2% goal. Today, the Federal Open Market Committee decided to reduce the degree of policy restraint by lowering our policy interest rate by a half percentage point. This decision reflects our growing confidence that with an appropriate recalibration of our policy stance, strength in the labor market can be maintained in a context of moderate growth and inflation moving sustainably down to 2%. We also decided to continue to reduce our securities holdings. I will have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. GDP rose at an annual rate of 2.2% in the first half of the year, and available data point to a roughly similar pace of growth this quarter. Growth of consumer spending has remained resilient, and investment in equipment and intangibles has picked up from its anemic pace last year. In the housing sector, investment fell back in the second quarter after rising strongly in the first. Improving supply conditions have supported resilient demand and the strong performance of the U.S. economy over the past year. In our summary of economic projections, committee participants generally expect GDP growth to remain solid, with a median projection of 2% over the next few years. In the labor market, conditions have continued to cool. Payroll job gains averaged 116,000 per month over the past 3 months, a notable step down from the pace seen earlier in the year. The unemployment rate has moved up, but remains low at 4.2%. Nominal wage growth has eased over the past year, and the jobs to workers gap has narrowed. Overall, a broad set of indicators suggest that conditions in the labor market are now less tight than just before the pandemic in 2019. The labor market is not a source of elevated inflationary pressures. The median projection for the unemployment rate in the SEP is 4.4% at the end of this year, 0.4 higher than projected in June. Inflation has eased notably over the past 2 years, but remains above our longer run goal of 2%. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.2% over the 12 months ending in August, and that excluding the volatile food and energy categories, core PCE prices rose 2.7%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The median projection in the SEP for total PCE inflation is 2.3% this year and 2.1% next year, somewhat lower than projected in June. Thereafter, the median projection is 2%. Our monetary policy actions are guided by our dual mandate to promote.
It's not exactly liking what he has to say, but there's a big chance it rallies up here. Big chance.
Maximum employment and stable prices for the American people. For much of the past 3 years, inflation ran well above our 2% goal, and labor market conditions were extremely tight. Our primary focus had been on bringing down inflation, and appropriately so. We are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like.
Oh yeah, HOTCOIN's been an issue. It's been during the trades, it's been like trading out and rebuying back in as the trades are open, which is interesting. Earlier it cost me a little bit of money. We've gained a little bit back now. It's not noticeable because the trade's still open, but it keeps shuffling the amount, so it makes it very difficult to trade. There's a big discrepancy. That's why I put the warning out earlier to tell everybody, like, hey, if you want to pause it and not copy trade with me, I understand it, but I'm going to try to fight through it, win, lose, or draw. So it's up to you guys. Hopefully they fix it, but, you know, it's interesting at the least.
Food, housing, and transportation. Our restrictive monetary policy has helped restore the balance between aggregate supply and demand, easing inflationary pressures and ensuring that inflation expectations remain well anchored. Our patient approach over the past year has paid dividends. Inflation is now much closer to our objective, and we have gained greater confidence that inflation is moving sustainably toward 2%. As inflation has declined and the labor market has cooled, the upside risks to inflation have diminished and the downside risks to employment have increased. We now see the risks to achieving our employment and inflation goals as roughly in balance. And
you could skip this ad, but don't skip the part that can help you get.
So, I mean, indecisive at best here. We're indecisive at best. We are indecisive at best. We'll go back to that in just a minute. Well, I guess we can just look right now. It's just I can't see the comments as good when it's like this. But we're indecisive at best. If it's a clown coin for... No. Got to keep your positive momentum, guys. Don't let the market ruin your mindset. Still... You know, there's no guarantee we were going up far. It's just, there's so much volatility right now. But that's a good sign the way it started right now. We reversed the dot cross, and as long as we don't give back now, 57.66, you know, we're on the top side of that dot cross now. So, I mean, there's a lot that still needs to happen, believe me. But yeah, I lost some money on copy trading too today because it constantly is opening my trade and then it shuffles it around and reopens it. But it stays open. I don't know, it seems sleazy to me. But definitely, there was a reason why I put that out earlier about what was going on. So I'm enjoying it. Some people said they're going to stay strong, but others, honestly, I don't blame anybody. Here, let's keep listening to this.
Plan or decision. As the economy evolves, monetary policy will adjust in order to best promote our maximum employment and price stability goals. If the economy remains solid and inflation persists, we can dial back policy restraint more slowly. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we are prepared to respond. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation back down to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Didn't even tell us.
Steve Leisman, CNBC. Thank you, Mr. Chairman, for taking our questions. In July, you said you weren't necessarily thinking about a 50. You didn't want to be specific, but you said you weren't thinking about a 50. The inflation data last week came out a little firmer than expected. Retail was strong, third quarter GDP running 3%. So what changed and made the committee go 50? And how do you respond to the concerns that perhaps it shows the Fed is more concerned about the labor market? And I guess, should we expect more 50s in the months ahead? And based on what should we make that call? Thank you.
So, okay, a lot of questions in there. Let me jump in. Since the last meeting, we have had a lot of data come in. We've had the 2 employment reports, July and August. We've also had 2 inflation reports, including one that came in during blackout. We had the QCEW report, which suggests that suggests that the payroll report numbers that we're getting may be artificially high and will be revised down. You know that. We've also seen anecdotal data like the Beige Book. So we took all of those and we went into blackout and we thought about what to do, and we concluded that this was the right thing for the economy, for the people that we serve, and that's how we made our decision. So that's one question. What was the second and third?
How do we make sorry, thank you, sir. How do we figure out in the months ahead, is there another 25 or 50 coming in? Based on what shall we make that call? Thank you.
Sure. So a couple things. A good place to start is the SEP, but let me start with what I said, which was that we're going to be making decisions meeting by meeting based on the incoming data, the evolving outlook, the balance of risks. If you look at the SEP, you'll see that it's a process of recalibrating our policy stance away from where we had it a year ago when inflation was high and unemployment low, to a place that's more appropriate given where we are now and where we expect to be. And that process will take place over time. There's nothing in the SEP that suggests the committee is in a rush to get this done. This process evolves over time. Of course, that's a projection. That's a baseline projection. We know, as I mentioned in my remarks, that the actual things that we do will depend on the way the economy evolves. We can go quicker if that's appropriate. We can go slower if that's appropriate. We can pause if that's appropriate. But that's what we are contemplating. And I would point you to the SEP as just an assessment of where of what the committee is thinking today, what the individual members rather of the committee are thinking today, assuming that their particular forecasts are realized.
Hi, Chris Rugaber at Associated Press. Thank you. The projections show that the Fed officials expect the Fed funds rate to still be above their estimate of long-run neutral by the end of next year. So does that suggest you see rates as restrictive for that entire period? Does that threaten the weakening of the job market that you said you'd like to avoid? Or does it suggest that maybe people see the short-run neutral as a little bit higher than Thank you.
I think the way I would really characterize it is this. I think people write down their estimate, individuals do. I think every single person on the committee, if you ask them what's your level of certainty around that, they would say there's a wide range where that could fall. So I think we don't know. There are model-based approaches and empirically based approaches that estimate what the neutral rate will be.
Bitcoin seems to be was making a little noise, but now it seems to be coming back down. 60,593 is a big area for Bitcoin. XRP, man, I'm not sure. Every time it tries to make a little bit of noise, it's actually consolidating nicely for what it's done if we want to have a continuation. That's not the issue. If we want to jump out the gate, we're probably going to have to come back to like 57.30. That's where this golden cross in the 5 minute, maybe we could get a little bit of power, but we would power ourselves up to like 58.83. I know it's not exciting, folks. I know it's not exciting sometimes, but I think it's super exciting right now. Like, there's just so much stuff. Like, remember what I said, I don't expect commodities to blast out of here. I'm honest with you. And I'll be honest, when I was on my phone, when it hit $3.41, like I said, B2 Gold was overextended. I didn't sell it at I did. I sold it at 341. First Majestic at 623. So this might just go right back up, but I have a bad feeling about this because we were so overextended. So I'm willing to sit here and have dry powder for this part of the market. It ran up so quickly for me. If it runs through, I can buy it back around 351, so I'm not worried because I have my levels. But still, man, it ran so quick. Now it makes me nervous. It makes me very nervous. But we bought at $2.60 something cents, so it made me about $3,000. I mean, I'm not gonna lie about it. It was about $3,000. And then First Majestic made me about 800. So it was a good 10 to 15 days. So I'm going to wait with the dry powder because the market's not reacting. Well, it reacted exactly like I wanted this morning, which made me nervous. I knew it was going to have a quick run up with gold. I think it's going to reverse. But I think cryptocurrency, on the other hand, started off a little down. Cryptocurrency might be the one that takes the next part. So let's finish listening to this guy.
At any given time, but realistically, we know it by its work.
If you are watching, make sure to hit that like button. Only 81 of you have hit the like button, 146 people watching. I would greatly appreciate it. Will be recommended by YouTube if you do hit that like button. And guys and gals, like, the crazy thing is all that opening and shutting, it shows that that last trade was, well, was an $8 profit. Big freaking deal after earlier. But you know, there is an active one, but whether it reacts the way I want it to, because once I open it, it seems that there's just some API issues, which it makes it fun but stressful for me at the same time. We've already lost 11 people from copy trading today. And the crazy thing is that last trade, the P&L, there was 28 people. It was minus 311, so, or 353, so it wasn't as bad as I thought. I thought it was going to be way worse. So for anybody who sticks it out, you're going to see a lot more volatile trading now. Until they fix this, I'm going to have to trade in a strategic way, and it can get pretty fun. It can get pretty fun. It's almost like all gloves are off now. There's a no-hold bars. But yeah, let's watch him continue to talk. I would love to see XRP make a little momentous move here. We've already started a little reversal. In the 30-minute, we're just trying to hold here over 5768. It looks like we're going to push up. It does, but at the same time, I mean, what do I know? Because honestly, with what Jerome says, he could make the market just shit itself in 2 seconds. But it looks like we're about to go higher here, in the immediate short term at least, which is a good news. This is good news while we're watching. This brings in positive momentum.
So that leaves us in a place where we expect, in the base case, to be continuing to remove restriction, and we'll be looking at the way the economy reacts to that, and that'll be guiding us in our thinking about the question that we're asking at every meeting, which is our policy stance the appropriate one? We know, if you go back, we know that the policy stance we adopted in July of 2023 came at a time when unemployment was 3.5% and inflation was 4.2%. Today, unemployment is up to 4.2%, and inflation's down to a few tenths above 2%. So we know that it is time to recalibrate our policy to something that is more appropriate given the progress on inflation and on employment moving to a more sustainable level. So the balance of risks are now even. And this is the beginning of that process. I mentioned the direction of which is toward a sense of neutral. And we'll move as fast or as slow as we think is appropriate in real time. But what you have is our individual accumulation of individual estimates of what that will be in the base case.
Howard.
Howard Schneider with Reuters. How close was this in terms of the decision? You didn't have the first ascent.
Ooh, I didn't even notice this. Is this a V shape? V shape? Sorry, if this is a V shape, this is good. This is good. If this is a V shape, maybe we can get out of here. I'll replay Jerome in a sec, but he really does bore me because he lies. But that could be a V shape. If that's a V shape, it should bring us, you know, at least up to here. We might get a little, and then maybe, but I would like to see it just come right to there. So we'll see if that happens or if it plays back down or whatever. It's just so volatile. It's so fun when it's like this, but it's so stressful and fun. Never forget about the part of fun. You know, it might be stressful, but there's a lot of thrills that can come with this too. So let's hear Jerome. He seems to be pissing us off.
2005, I think. Was the weight clearly in favor of a 50, or was this a very close decision?
I think we had a good discussion. If you go back, I talked about this at Jackson Hole, but I didn't address the question of the size of the cut, left it open, and I think we left it open going into blackout. And so there was a lot of discussion back and forth, good diversity of division, excellent discussion today. I think there was also broad support for the decision that the committee voted on. So I would add, though, look at the SEP. All 19 of the participants wrote down multiple cuts this year, all 19. That's a big change from June, right? 7 of them wrote down 3 or more, 17 of the 19 wrote down 3 or more cuts, and 10 of the 19 wrote down 4 or more cuts. So
XRP is begging for someone to put in a buy order right now. It's begging. But what happens every fucking time? Somebody puts in the almighty sell fucking order. Every single time it feels like we get that almighty friggin' sell order. Look at that. Every damn time. It's like we can't avoid the sellers. I can tell you one thing. This is good, though. Don't think that it just broke down. We needed this. Remember I talked about the V-shape and then push? That's what we're trying to get. V-shape, push. V-shape, push. V-shape, push. Come on, guys, push.
There is a dissent and there's a range of views, but there's actually a lot of common ground as well.
Follow up to that. Now that this is in the books, can you give us some guidance, sort of follow up to Steve, on the pacing here? Would you expect this to be running every other meeting once we get into next year? For example,
we're going to take it meeting by meeting. As I mentioned, there's no sense that the committee feels it's in a rush.
50 basis point rate cut, and then he said there's still room for another 75 and 100 or some shit, like 75 or 50 before the end of the year, and then 100 again next year, and then room for more after that. So it was very bullish for gold and commodities, but gold, because of how bullish it was, sometimes you do get these, I don't know, it's a weird moment right now. I just want to see how this plays out sitting here from the comfort of my own seat. I had a spectacular move, and now I just want to see how it plays out. I've got a lot of dry powder now, and if it gets, like I said, I've got threshold levels. If B2 gold gets to 352, then I would consider buying it back. Or if it comes down near like $3.16, $3, because it's going to have somewhere along the line, we're going to have a big retest. And like, after I've hit my satisfying levels, I'm satisfied. And then I see how it's looking, and then I rinse and repeat. So we'll see what happens. Yes, gold in the future is going to go crazy. Yes, silver is. But I've seen this before on the rate cut. Overall, we always pump off the rate cuts with gold and silver. But sometimes the initial day and a half, 2 days, it's very shaky. And then all of a sudden, it just rockets. But let's listen to this guy. Let's just listen to him.
Do this. We made a good, strong start to this, and that's really, frankly...
Oh, and if you do appreciate my time and all the stress I put myself through for the better of the community, consider joining Tom's Army. Get the emoji badge of me being abducted by aliens in month 1, or you can send a YouTube super chat. I'm sure nobody's that interested in sending a super chat today, particularly with the way the market looks. I don't blame you. But we're here just as such. But let's continue this on.
A sign of our confidence. Confidence that inflation is coming down toward 2% on a sustainable basis. That gives us the ability. We can, make a good, strong start. But and I'm very pleased that we did. To me, the logic of this, both from an economic standpoint and also from a risk management standpoint, was clear. But I think we're going to go carefully, meeting by meeting, and make our decisions as we go.
Gina.
Hi, Chair Powell. Gina Smilik of the New York Times. Thanks for taking our questions. You and your colleagues in your economic projections today see the unemployment rate climbing to 4.4% and staying there. Obviously, historically, when the unemployment rate climbs that much over a relatively short period of time, it doesn't typically just stop. It continues increasing. And so I wonder if you can walk us through why you see the labor market stabilizing, sort of what's the mechanism there, and what do you see as the risks?
So, again, the labor market is actually in a solid condition.
There you guys, I saved all of you from Glenn for the next 30 minutes. We're trying to have a positive vibe. I don't want everybody to lose their vibe and go negative. Everybody's so focused on Glenn, so I'm just going to remove him from the situation from now. So Glenn, we'll see you in a half hour.
And our intention with our policy move today is to keep it there. You can say that about the whole economy. The U.S. economy is in good shape. It's growing at a solid pace. Inflation is coming down. The labor market is in a strong pace. We want to keep it there. That's what we're doing.
Sorry, Nick.
Nick Timmeros of the Wall Street Journal. Chair Powell, does today's action constitute a catch-up in action given recent substantial revisions to the employment data? Or is this larger than typical rate cut a function of the elevated nominal level of the policy rate such that an accelerated cadence could be expected to continue?
Okay. Multiple questions in there, but so I would say we don't think we're behind. We do not think we think this is timely, but I think you can take this as a sign of our commitment not to get behind. So it's a strong move. So your other question was?
Well, is this about what happened in the employment data between the...
I'm sorry, but this guy's so full of shit, it makes my ears bleed. Is the economy strong? Oh, it's great. Yeah, okay. But look, guys, remember what I said? I'm not trying to steer you wrong, okay? Yes, I love to death B2 Gold and First Majestic, but I'm not married to them. That's what I've tried to teach here. I'm not married to it. We got a sell signal at 332. I was willing to wait it out until the rate hike, and then I said once it hits 340, 345, I'm done. If it looks like it, if it's not gonna follow through, and now it looks like it's not gonna follow through. Like gold doesn't look like it's gonna initially fall through. I was very nervous about this. Everybody knows my stance. I still think gold could come down to 25, 26 after this rate cut. Like, it didn't satisfy it before the move. Like, I wanted it to come down before the rate cut. Everybody knows my positioning. I really wanted gold at 2,484 and then boom out of here with the rate cut. I wanted B2 Gold back at $3.14 when the rate cut was announced. It was all the way up at 340 almost. This isn't the way we needed to do it. I wanted First Majestic around 550, and what did it do? It went up to like 640. Or 635. Like, it went the wrong way. So now we're going to have to pay our sins, I feel like. I feel like we're going to pay the sins. But remember, don't lose hope. Don't lose hope. Easy gains come as easy losses. But remember, if you repeat the right cycle, you're going to benefit time after time after time. I'm telling you. And if we rotate out of precious metals right now, where do you think that money's going? It could very well cycle into crypto. I'm just being honest. I'm just being honest. So, but that's my perception. So we'll see if it continues falling down. For the hope of gold, precious metals, and that, I prefer it to just do the dump now and do what it has to do. But if it goes up, I'm more than happy. I don't ever sell my gold and silver bullion. So what I've collected over the last 7 years in silver rounds, gold rounds, silver... sorry, somebody just walked by. I thought they were going to come back here, but they kept walking. So it must just be, I think the meter reader went by yesterday. And then they do the businesses the day after, which is interesting. But you either have your silver rounds or silver bars, gold rounds, gold bars, and then you let it ride during inflation. I mean, I'm going to try to build into a position on XRP. We're going to use the platform the best we can on the copy trading. And if you're willing to stay around with me, you're going to see a lot of volatility. But if you want to leave, I totally understand. But we're going to start anew and work the system against them. And it's just the time to do it. Now that I see everybody, the additional trades at least open up, I'll start small and we'll try to work it in. So, you know, we'll see what happens. But let's finish this clown show because that's all this is. It's an epic clown show.
Meeting in the last...
Let me do an intro real quick. Did I already do an intro? Ladies and gentlemen, did I do an intro at the beginning? I didn't think so. I didn't think so. Good mid-afternoon. 3:03 p.m. Eastern Standard Time on this Wednesday, September 18th. 2024. I'm XRP future millionaire, and I reside in the great state of Michigan. Wow. 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 So, I know there's a lot of discrepancies with the copy trading. You want to know what it shows me? This is what mine shows. With everything that's happened. Oh, I can't even show you. I gotta... fuck. We'll do this later. I don't want to do this during this live because this isn't like the normal live. Let's just continue with the rate cut. Let's not do anything stupid.
Well, is this about what happened in the employment data between this meeting and the last meeting, or is this about the level of the funds rate, the high nominal level of the funds rate relative to what might be expected if you're trying to maintain equilibrium?
I think it's about, we come into this with a policy position that was put in place, as you know, I mentioned in July of 2023, which was a time of high inflation and very low unemployment. We've been very patient about reducing the policy rate. We've waited. Other central banks around the world have cut, many of them several times. We've waited, and I think that patience has really paid dividends in the form of our confidence that inflation is moving sustainably down to 2%. So I think that is what enables us to take this strong move today. I do not think that anyone should look at this and say, oh, this is the new pace. You have to think about it in terms of the base case. Of course, what happens will happen. So in the base case, what you see is, look at the SEP. You see cuts moving along. The sense of this is we're recalibrating policy down over time.
Kryptonian, thank you so much for the $5 donation with on Cash App. I really appreciate that. Seriously. Thank you so much.
To a more neutral level, and we're moving at the pace that we think is appropriate given developments in the economy in the base case. The economy can develop in a way that would cause us to go faster or slower, but that's what the base case says.
And if I could follow up on the balance sheet. In 2019, when you did the mid-cycle adjustment, you ceased the balance sheet runoff. With a larger cut today, should there be any signal inferred about how the committee would approach end state on the balance sheet policy?
So in the current situation, reserves have really been stable. They haven't come down. So reserves are still abundant and expected to remain so for some time. As you know, the shrinkage in our balance sheet has really come out of the overnight RRP. So I think what that tells you is we're not thinking about stopping runoff because of this at all. We know that these two things can happen side by side. In a sense, they're both a form of normalization. And so for a time, you can have the balance sheet shrinking, but also be cutting rates.
Colby.
Thank you, Colby Smith with the Financial Times. Just following up on Gina's question on rising unemployment, is it your view that this is just a function of a normalizing labor market amid improved supply, or is there anything to suggest that something more concerning perhaps is taking place here, given that other metrics of labor demand have softened too? And I guess in direct follow-up to Gina is, why should we not expect a further deterioration in labor market conditions if policy is still restrictive?
So I think what we're seeing is clearly labor market conditions have cooled off by any measure, as I talked about in Jackson Hole. And but they're still at a level. The level of those conditions is actually pretty close to what I would call maximum employment. So you're close to mandate, maybe at mandate on that. So what's driving it? Clearly, payroll job creation has moved down over the last few months, and this bears watching. By many other measures, the labor market has returned to or below 2019 levels, which was a very good, strong labor market, but this is more sort of 2018-17. So the labor market bears close watching, and we'll be giving it that. But ultimately, we believe, with an appropriate recalibration of our policy, that we can continue to see the economy growing, and that will support the labor market. In the meantime, if you look at the growth in economic activity data, the retail sales data that we just got, second quarter GDP, all of this indicates an economy that is still growing at a solid pace. So that should...
My question is, everybody, do you think this is a topping reversal here and it's going to give all this back? Or do you think this is... if you look at this in a slightly bigger perspective, do you think this is how we can play off of a little flag here? Because if we give all this back, we're probably going to 53 cents. If we give this back, and we find ourselves under here, we're probably going to 53.3 cents. I mean, I'm just being honest with everybody. And we really can't afford to give this back. But it's not looking so hot right now. I even had a small trade just now. It went through the stop loss very quickly. It's like a $10 loss. Nothing major. But I'm trying to find, and that looks like it came through a signal. I mean, I don't know. We'll see. We'll see, because this is a little dicey right now. The way it happened right out the gate was dicey. It's all dicey. Like, all markets seem very... This seems not good right now. I'm sorry, but this doesn't look good right now. The way all markets are starting to react to what he's saying, it looks like... I want to see everything kick up real quick. That's what I want. I want to see everything kick up real quick. You tell me what you think. Who is there anybody part of this audience who's still part of the copy trade? Yes or no? Because we're going to do this together on the next opening. And then I'm going to work with it. If it takes days, weeks, month, I don't care. And if the system buys and sells, and I don't care. I'm going to work with it, and we're going to buy some, sell some when we're in the profits. When we're, you know, we're going to reposition. We'll do whatever we have to do. But I am going to try to work around all of this, and I'm very excited to do it because I have a lot of fun. And this is going to make me better in my spot game. So don't have anything in there you can't afford to lose. I know I don't. But I don't want anybody else to go off on a... We're still up like $230, $240. I don't know what it is. $230, something. I don't know. But this is going to get volatile. And I want to be part of this so that I can learn in the moment too. This teaches me so good. This teaches me so good. Like, it teaches me a lot. I mean, I don't know how else to put it. So... I have a sell signal on the 15. Yep. I'm going to do 200. Hope it's... Yes. I understand. Stopped out for a while. We'll... Yep. Yep. Unfortunately, it did give a sell signal. But let's finish watching this real quick. We'll see, though, if it plays off the sell signal or if this is a overzealous reaction. But we definitely had a big reversal in the 15. And it looks like it's going to be more engulfing to the top. Or the downside. Awesome. I love seeing the support, guys. If you and gals, the guys and gals, if you're willing to do it with me, I'll keep doing the copy trading until I see 0 people left on there. No matter the problems, no matter if I lose or win, you know, I will continue to do it until I see a reason not to. And that would mean that nobody wants to do it anymore, whether we win or lose. This is teaching me a lot because liquidity levels are different. I have to start off like 3% down on every trade, which is a pain in the ass. It's on a 10x, on a 5x trade, it's about 1.8 to 2%. So it teaches me a lot in the moment. A lot in the moment. No, yes, I had to switch it to 5x because of the problems with the differential. I used to do it at 10x, but it kept starting us off like 3.7 to 4% down. So I figured to culminate it a little bit, I switched it to 5x for the XRP Bitcoin pairing. Now, if I do Ethereum or Bitcoin, it'll be different. But I'm trying to focus more on XRP so I can get a rhythm with it. I'm telling you, if we can get a rhythm, it's going to be really, really, it's going to be unbelievable once we get into a big move. Felix, what's the 0.5 fib? Chat says, found you a week ago and have been subscribed since then from British Columbia. Really like you. Thanks. Hey, thank you so much for that, my friend. I really appreciate that. I love it. I don't do it on Coinbase. Why does everybody keep seeing Coinbase? I do it on HOTCOIN. I hate Coinbase. I've never had a Coinbase account. I do the copy trading on HOTCOIN. Somebody keeps saying in the comments I do it on Coinbase. Not in the live, but when I do it in the, when I do updates about it, I keep hearing about that I do it in on Coinbase or Binance, which is false. 15-minute could be starting a little rotational tug, though. This is the thing. I think we could be reversing in the 3-minute. Like, this is where I would want to get exposure real quick. And this is where I'm telling you, volatility could happen here and you could lose some money. So don't be afraid not to follow me is all I'm saying. Don't be afraid to leave. You're not going to hurt my feelings. But it's an interesting time is all I'm saying.
To support the labor market over time. So, but again, it bears watching and we're watching.
And just on the point about starting to see rising layoffs, if that were to happen, wouldn't the committee already be too late in terms of avoiding a recession?
So our plan, of course, has been to begin to recalibrate. And as you know, we're not seeing rising claims. We're not seeing rising layoffs. We're not.
But I'm going to stop talking. I got to leave. this live at 3:30 no matter what, because my son has physical therapy and we got to leave here at 3:40. So no matter what, I'm going to be ending this at 3:30. So let me let him finish.
Seeing that, and we're not hearing that from companies that that's something that's getting ready to happen. So we're not waiting for that, because there is thinking that the time to support the labor market is when it's strong, and not when you begin to see the layoffs. There's some lore on that. So that's the situation we're in. We have, in fact, begun the cutting cycle now, and we'll be watching, and that'll be one of the factors that we consider. Of course, we're going to look at the totality of the data as we make these decisions meeting by meeting.
If this plays out and it just holds here for the next like 25 seconds, this is a strong reversal possibly in the 5 minute. It could solidify this golden cross in the shorter time frame. Got 17 seconds on this candle. We don't want any more upward movement yet. Just let it sit here and have more movement in the next candle.
Michael McKee with Bloomberg TV and radio. To follow up on that, what would constitute for you and the committee a deterioration in the labor market? You're pricing in basically by the end of next year 200 basis points of cuts just to maintain a higher unemployment rate. Would you be moving to a more preemptive monetary policy style rather than, as you did with inflation, waiting until the data gave you a signal?
No, we're going to be watching all of the data, right? So if as I mentioned in my remarks, if the labor market were to slow unexpectedly, then we have the ability to react to that by cutting faster. We're also going to be looking at our other mandate, though. We have greater confidence now that inflation is moving down to 2%, but at the same time, our plan is that we will be at 2%, over time. So, and policy we think is still restrictive, so that should still be happening.
I'm just curious as to how sensitive you'll be to the labor market, since you forecast we are going to see higher unemployment and it is going to take a significant amount of monetary easing to just maintain it.
So, what I would say is we don't think we need to see further loosening in labor market conditions to get inflation down to 2%. But we have a dual mandate.
I had heard about all the opportunities that Heidelberg University had.
Yep, it's looking like we have a little cross here in the 5 minute. I seen in the comments too, somebody said 4 hourly as well. That's excellent news. We'll see though. We'll see if it ends up crossing here and it plays out properly. It very well could. We could have a little bit of momentum here. This is a good 5 minute stretch here and followed up by another 5 minute stretch. I mean, it hasn't been followed up directly yet. We want to see a breach of this resistance now on this 5 minute candle, which would be excellent. It really would. We could make some noise here. I mean, I'm not joking. It's just difficult. We're in a difficult spot. Your emotions don't let it get the best of you. That's all. If you stay within yourself, you'll be fine.
To be most helpful in the discussions at this meeting. You mentioned a couple, but would you be able to walk us through what that dashboard told you as far as what you know about the job market now?
Sure. So we'll start with unemployment, which is the single most important one probably. You're at 4.2%. That's, I know that's higher than we were used to seeing numbers in the mid and even below mid threes last year. But if you look back over the sweep of the years, that's a very healthy unemployment rate. And anything in the low fours is a good labor market. So that's one thing. Participation is at high levels. It's, we're right adjusted for demographics, for aging. Participation's at pretty high levels. That's a good thing. Wages are still a bit above what would be their wage increases, rather, are still just a bit above where they would be over the very longer term to be consistent with 2% inflation, but they're very much coming down to what that sustainable level is, so we feel good about that. Vacancies per unemployed is back to what is still a very strong level. It's not as high as it was. That number reached 2 to 1, 2 vacancies for every unemployed person. As measured, it's now around 1, but that's still a very good number, I would say. Quits have come back down to normal levels. I mean, I could go on and on. There are many employment indicators. What do they say? They say this is still a solid labor market. The question isn't the level. The question is that there has been change particularly over the last few months. And, so what we say is, as the risks, the upside risks to inflation have really come down, the downside risks to employment have increased. And because we have been patient and held our fire on cutting while inflation has come down, I think we're now in a very good position to manage the risks to both of our goals.
And what do you expect to learn between now and November that will help inform the scale of the cut at the next meeting?
More data, the usual. Don't look for anything else. We'll see another labor report. We'll see.
What's this magical data? It's always, we need more data. I don't think we do. I think we got all the data we need. The economy's, it's horrible. It's over. But hey, keep talking, buddy. And if I don't see everybody live tonight, because my mom's supposed to come over after my son gets out of his physical therapy, it's been a pleasure to do this live with all of you for the last hour. A few more minutes left. And thank you, Mr. Caston, Mark Caston, for the several dollar donation and also being in Tom's Army. I really appreciate you, my friend. It means a lot to me.
Another jobs report. I think we get we get a second jobs report on the day of the meeting, I think. On the Friday before the meeting. And inflation data. We'll get all this data. We'll be watching. It's always a question of look at the incoming data and ask for the implications of that data for the evolving outlook and the balance of risks, and then go through our process and think, what's the right thing to do? Is policy where we want it to be to foster the achievement of our goals over time? So that's what it is, and that's what we'll be doing.
Hi, Chair Powell. Neil Irwin with Axios. We've only been running a little above 100,000 jobs a month on payrolls the last 3 months. Do you view that level of job creation as worrying or alarming, or would you be content if we were to kind of stick at that level? And relatedly, one of the welcome trends of the last couple of years has been labor market steam coming out through job openings falling rather than job losses. Do you think that trend has further to run, or do you see risk that further labor market cooling will have to come through job losses?
So on the job creation, it depends on the inflows, right? So if you're having millions of people come into the labor force, and you're creating 100,000 jobs, you're going to see unemployment go up. So it really depends on what's the trend underlying the volatility of people coming into the country. We understand there's been quite an influx across the borders, and that has actually been one of the things that's allowed unemployment rate to rise. And the other thing is just the slower hiring rate, which is something we also watch carefully. So it does depend on what's happening on the supply side. And on the beverage curve question, yes. So we all felt on the committee, not all, but I think everyone on the committee felt that job openings were so elevated that they could fall a long way before you hit the part of the curve where job openings turned into higher unemployment, job loss. And yes, I think we are. It's hard to know that you can't know these things with great precision, but certainly it appears that we're very close to that point, if not at it, so that further declines in job openings will translate more directly into unemployment. But it's been a great ride down. I mean, we've seen a lot of tightness come out of the labor market in that form without it resulting in lower employment.
He scared everybody. The bottom line is he scared everybody. This is what I was anticipating. This is the problem. To try to build into this position, though, if you're copy trading me, it could cost us up to $30 if it doesn't go right. I'm just telling you right now. But fuck, with what we've been dealing with today, who really cares about any of that? We'll try to figure it out. I'm not swayed by it. I'm not swayed. We built a little bit of a wall, but still. It's, he's scaring everybody. He's coming out talking the bullshit, and now we're getting the rate cut. But now the ones who know what's up are getting panicked too, because now all of a sudden they get a 0.5% less on their savings account. When they do the next one, now all of a sudden it's 1.25%. And then when they do 100, then it's 2.25% less on your savings account. So, you don't want that. You certainly don't want that. The 10-year going up 1.7% is insane. As we say, the lenders and buyers of last resort, the Fed, are buying up the treasuries right now. That is not a good sign. This is not a good sign.
Thanks, Chair Powell. Edward Lawrence, Fox Business. So we've heard some speculation that you may be going with the federal funds rate to 3.5, maybe under 4%.
I like. I'm sorry, but I do like that 5-minute time frame. And that 5-minute XRP looks a little bullish here. Yeah, it really does. So we'll see what happens here, but kind of looks bullish to me. So I'm thinking it's bullish. I'm thinking we're gonna get a little surprise here. If it comes down and breaks what looks like a double bottom at 57.20 area, well, then obviously it's invalidated. But to me, it's looking like it's telling us it's about to go up here for a minute, maybe. Maybe XRP. And it would either pull us up to 50. Ugh. Well, let's just hope it breaks out. Just come up to the top here at about 58, 59 cent area. That's what I'm looking for. Let's get a little bounce here. Give us some volatility.
Entire generation that has experienced zero or near zero federal funds rate. Now, some think we're heading in that direction again. What's the likelihood that cheap money is now the norm?
So this is a question, and you mean after we get through all of this? It's just...
Honestly, and everybody, if you're mad XRP dumped so far, don't be. I wanted to see it dump a little bit before the push up if it was going to have one. After that initial run up. Now it's doing what we need it to do. Now it consolidated twice on the 5-minute, created a golden cross, and it's trying to flip short term.
Great question that we can only speculate about. Intuitively, many people anyway would say we're probably not going back to that era where there were trillions of dollars of sovereign bonds trading at negative rates, long-term bonds trading at negative rates. And it looked like the neutral rate might even be negative. So there was people were issuing debt at negative rates. It seems that's so far away now. My own sense is that we're not going back to that. But honestly, we're going to find out. But it feels to me and that the neutral rate is probably significantly higher than it was back then. How high is it? I just don't think we know. We only know it by its works.
And one more. How do you respond to the criticism that will likely come that a deeper rate cut now before the election has some political motivations?
Yeah, so this is my fourth presidential election at the Fed, and it's always the same. We're always going into this meeting in particular and asking what's the right thing to do for the people we serve, and we do that, and we make a decision as a group, and then we announce it, and that's always what it is. It's never about anything else. Nothing else is discussed, and I would also point out that the things that we do really affect economic conditions for the most part with a lag. So nonetheless, this is what we do. Our job is to support the economy on behalf of the American people. And if we get it right, this will benefit the American people significantly. So this really concentrates the mind. And, it's something we all take very, very seriously. We don't put up any other filters. I think if you start doing that, I don't know where you stop. And so we just don't do that.
Jolene.
Thank you, Chair Powell. I'm Jolene Kent with CBS News. My first question is, very simply, what message are you trying to send American consumers, the American people, with this unusually large rate cut?
I would just say that, the U.S. economy is in a good place, and our decision today is designed to keep it there. More specifically, the economy is growing at a solid pace. Inflation is coming down closer to our 2% objective over time. And the labor market is still in solid shape. So our intention is really to maintain the strength that we currently see in the U.S. economy. And we'll do that by returning rates from their high level, which has really been the purpose of which has been to get inflation under control. We're going to move those down over time to a more normal level over time.
Just a quick follow-up to that. Listening to you talk about inflation moving meaningfully down to 2%, is the Federal Reserve effectively declaring a decisive victory over inflation and rising prices?
No, we're not. So inflation, what we say is we want inflation, the goal is to have inflation move down to 2% on a sustainable basis. And, we're not really, we're close, but we're not really at 2%. And I think we're going to want to see it be, around 2%. And
All right, guys, I gotta let it go. I gotta get my son to physical therapy. Thank you all for tuning in this live for the last hour and 4 minutes. When I'm at his PT, I'll probably do an update there if I have time. So expect an update in the next probably hour and a half or so to be uploaded. So pay attention, and I'll try to update everybody a little bit further as we go along.